Good morning and welcome to Morning Markets. Today we're going to be focusing on Japan, China and closer to home the UK, and what news this morning has meant for the market's reaction. Starting with Japan this morning, they were in focus because they had their latest interest rate decision meeting. Coming into the meeting, there was expectations that there wasn't going to be a change in the overall interest rate, but there's increasing speculation that they're getting close to a change. Now, for context, their current interest rate is at minus 0.1%, so very, very different to what we have here in the UK at 5.25%. The reason for that is that historically they have really been challenged by having very low inflation. So over the last 30 years, they've had inflation on average at 0%, and they've had low wage growth. Now, over the last 18 months, there has been developments that have seen substantial wage growth increases, as well as inflation accelerating. So inflation this time last year peaked at 4.4%, and it has been trending lower, but remains above 2%. And that should give the Bank of Japan scope to adjust their negative interest rate policy. This morning, it was announced that there was no change and remains at that negative rate. Looking at what they said and discussed, it was that they were still looking for more evidence that inflation would be sustainably above 2% or around that 2% level, and wanted to see a broadening out of wage growth increases over the coming months. In terms of the market reaction, very little reaction within Japanese equities, broadly flat on the day. In China, where we've seen noticeable weakness year to date, and their main stock market prior to today was on a 5-year low, as we've seen continued stress within the property developers, low consumer sentiment, as well as low foreign direct investment. And that's been a big headwind for domestic consumers, but also the stock market itself. So policymakers have released reports that they're looking to stem the recent weakness in equities by using 278 billion worth of offshore funds held at Chinese state-owned enterprises to use those funds to buy back their shares within the domestic market. So that saw equity markets in China rebound this morning, up around 3% at close. And then closer to home in the UK, it was announced that government borrowing was much less than expected for December, so it came in at 7.8 billion. That was almost half than what we saw a year prior, and it was actually the lowest reading since December 2019, and much lower than what was forecasted. The forecast reading was 14 billion, and the reason for the big undershoot was less spent on debt interest costs. Now, with less borrowed, it gives the Chancellor perhaps scope to actually cut taxes heading into a general election. So that's should be supportive for just the general economy. Less tax should allow consumers to spend more. But we'll have to wait and see, and we'll keep you up to date through the course of the year and how we see developments. That's all from us today. Thank you for watching, and we'll see you tomorrow.